Alright, so there are plethora of funds available in the market to invest your hard-earned money in, but how do you assess which is the right fund for your portfolio? What are the criteria that one should look at to help you navigate through this maze? Today I have with me Hemant, Rustagi, Vice Invest. Also, do not forget to send us your portfolio queries on our WhatsApp number, which is 8657974571. You can also email us a question on the Money Show at etnow.tv. Hi, good evening, Hemant, and welcome to the Money Show. We have a first viewer query ready for you, and this is via email from Chirag. Chirag says that he's a new investor and he wants to invest 10,000 to 15,000 per month. He also says that given the fact that he's a first-time investor, what kind of funds should he be picking up? Because I'm not sure about his knowledge on the share market, but then not only the fund mix, but also the way to go ahead and how for him being a long-term investor, because you're going through mutual fund, is recommendable.
Well, Kavita, I think there are two important things here. Chirag had said that he wants to invest, let's say, 10 to 15,000. I think it always helps that if you are very sure about how much you want to invest, but it's okay. I mean, if he has given us a range that this is how he wants to invest, and he wants to invest through SIP. And since he's a new investor, I think, again, I would say that he has chosen the right investment vehicle to invest money, because mutual fund, the advantage is that there are professionals who are managing your money. There is flexibility. There are a number of options available. You can do your asset allocation properly. So I'm assuming that here Chirag is looking to invest for the long term. So maybe you can consider investing in equity funds through SIP. For a new investor, it's important, one, to choose the right asset class, and it's equally important to choose the right category of fund. And within the category, choose funds that have a consistent performance track record. So I think two categories which can really help him get the exposure to all three segments of the market. One is a multi-cap fund. So he can consider investing around 40%, because since he has not mentioned exactly how much amount he wants to invest, so I'm giving it in terms of percentage, that in a multi-cap fund, which can be quoted multi-cap fund, he can invest 40% of allocation. And the remaining two fund can be from the large and mid-cap category. One could be HDFC large and mid cap, where he can invest 30%. And the second could be Motilal Oswal large and mid 30%. So what happens here is that the large and mid will invest minimum 35% in each of these segments, and a multi-cap will invest 25% in each of the three segments that one can invest in. So I think with this, he will get allocation to all the three segments exactly in the manner a long-term investor in the beginning should be doing. So I think two category of funds, but three schemes you can look at to begin with.
All right. Also, now since he's just stepping into this world of investments, and how would you like to explain to him that a route of mutual fund or the way through mutual fund to enter equity market is probably the best way for someone who is not well versed with the share market?
Well, I think there are a couple of things that simply, there are two ways that you can invest in equity market. One is directly investing into the stock. The second is through the mutual fund. Now, what happens is that when you're investing in equity, right, you need to be familiar with how you decide on stocks, how you decide on sectors, how you make changes, how you align your portfolio to the changing economic scenario, which I think becomes very difficult for a common investor to do that. So what happens when you invest through mutual fund? That it's a diversified vehicle. So even when you're investing 10, 15,000 rupees, your money is going into a different market segment, different sectors, well-diversified portfolio. There are professionals who are managing your money, right? And they are the ones who are taking decision on your behalf. So I think the major advantage, like I said, is professional fund management and diversification level. And I think once you start investing through mutual funds, you understand the nuances of investing in equity. You understand how equity market behaves, how different segments behave. It makes you a better investor. So I think there are always advantage of taking the mutual fund route.
All right, let's move on. Hemant, I have other viewer on the phone line with me, and he's Kishore. Hi, Kishore. Good evening. Thank you so much for sending us your question. You're calling from?
I'm from Bangalore, but now at the moment I'm in Kochi.
Okay. All right. So, Kishore, you're looking at investing in debt funds for long term?
Yeah, because the interest rates are expected to come down, I was wondering whether it is worth investing in long-term funds and which are the better long-term funds to invest in.
We'll help you with that. In fact, a very apt question. And Kishore, not only you, but a lot of investors looking at fixed income instruments and want to go beyond fixed deposit might want to consider long-term debt funds. But then, Hemant, is it the right time to consider long-term duration debt funds? And also, how do you manage the volatility that one might see in interest rates, considering the rate cut scenario in a few quarters' time now?
Well, Kavita, I think since we're talking about whether this is the right time to invest in the debt funds, I mean, again, we need to understand what kind of debt funds are we looking at. Look, we are at a stage where we're going to see interest rate cut at some point in time. I think it's $1 million question as to when it happens and the manner in which happen and how much rate cut will happen going forward and during what period the rate cuts will happen. Because of the inverse relationship between interest rate and the bond prices, obviously a scenario like this is always good when you're investing in the longer duration debt fund, because longer the maturity, the more you benefit from the falling interest rates. So obviously, yes, there is an opportunity there, but at the same time, we need to understand that like there are certain factors that I just mentioned one has to keep in account, because at the end of the day, these are market-linked products, right? If the rate cut does not happen in the manner which is being envisaged by the market, or it takes longer, or the rate cuts are not in the quantum that market is expecting, there can be some amount of volatility. So I think it's important for investor to understand that, be prepared for this kind of volatility. But at the same time, I believe that if someone has a slightly longer term horizon, maybe someone looking at, let's say, a 5 year or more, then maybe even hybrid funds can be very good. You could look at equity saving fund, you can look at balance advantage fund. Because here again, it's some sort of timing, because you're expecting the rate to fall and then you're trying to take advantage of that, which may not be easy for every common investor. So I think one has to be careful. Yeah, but yes, there is an opportunity for debt fund to deliver good return, but there are certain type of debt fund that I mentioned, only the longer duration one, which can deliver, and of course the medium term and the funds which are dynamically managed with the interest rates. When interest rate go down, these are the three categories that can benefit.
All right, Kishore, is there anything else you want to ask Hemant?
Any one or two funds that he would recommend?
I think the categories that he's mentioned, Hemant, any specific pick that you have?
Yes, I think if he indeed wants to look at longer duration fund, maybe he can look at HDFC long-term fund, longer duration fund, or SPI. But in the other categories that I mentioned, in the equity saving, he can consider looking at Kotak equity saving or SPI equity saving. And in the balance advantage, ICICI Pru balance advantage or Nippon balance advantage, these are some of the funds I think which have been doing well in these categories.
All right, Kishore, all the best with that. And time for a quick break, but then post that we are giving your mutual fund portfolio related queries answers. And I have with me Hemant Rustagi. Just in case you want to send across your questions, you can do that on our WhatsApp number and email ID. More questions coming up from our viewers after this break. Welcome back. You're watching The Money Show and we are answering viewer questions. With me is Hemant Rustagi and we have the next viewer online with us. I have with me Gaurav. Hi Gaurav, good evening.
Yeah, hi, good evening. How are you?
Hi, I'm doing good. Thank you so much for sending us your question. You're calling from?
Yeah, so I think you have my question. If you want, I can
Yeah. Sure. No, we do have your question and we also have your details of funds and your monthly SIP. And 1 CR you need, right, after 12 to 15 years.
Right. Sure. Once is targeting 12 to 15 years, and currently me and my wife is investing 10,000 in SIP. So
Sure.
2 funds, I am investing in SDFC multi-cap, having 5,000 investment per month, and my wife is investing in multi-cap, SDFC multi-cap SIP,
Sure.
same 5,000
Sure.
per month. So my question is, I want to add 4 more SIP, okay, to my investment, so that it will be around 30,000 per month. Okay, so that's my question, and I am just thinking of 2 SIP right now. One is Motilal Oswal Mid Cap SIP, and another is a Parakparik Flexi Cap for my wife, 5,000 each.
Wanted to understand, these funds you have selected on your own, or do you have a financial advisor on you?
Financial advisor guide me for that as HDFC fund,
Okay.
but for more funds, I want an advice from your panelists, because I am
Sure.
watching the show from last 2 months and really I am very happy, and I am just gaining knowledge from your show from last 2 months.
Sure, sure. Thank you so much, Gaurav. And let's talk to Hemant now, and let's discuss your financial portfolio and the way ahead. So, the goal is pretty clear, Hemant, 12 to 15 years and 1 CR. And he wants to add more funds in his portfolio and also increase the investment amount.
Well, Kavita, let me just begin with looking at whether he can achieve this target or not. He has a time horizon of 12 to 15 years. So I'm assuming that if he can continue this process for 15 years, and his intention is to increase the SIP to 30,000, right? He's already investing 10,000. He wants to add 10,000 more, and maybe he's looking at 2 more funds for 10,000. So if he continues his process for 15 years, assuming annualized return of 12%, he can expect to build a corpus of around 1.5 crore. So I don't see any problem in him achieving his target. But of course, the key is that he has to continue this process uninterruptedly. If he does that, he will definitely achieve much more than his target. In terms of fund selection, I think if you look at, there is HDFC Flexi Cap, there is a HDFC Multi Cap. Both the funds are fine. And the two funds that is looking to invest now, one is Motilal Oswal Mid Cap, and the second one is Parakparik Flexi Cap. I think both in terms of the category of fund and the quality of fund, I think both the funds are fine. For the remaining two, if he wants to add or whenever he wants to add, my recommendation would be maybe he can look at one contra fund, which could be SBI Contra, and one small cap fund, which could be Nippon India Small Cap Fund, because his time horizon is 15 years. So I think with this, he will have the right kind of exposure to different market segments and different investment philosophies. So I think that should be it. But I think my recommendation is always that maybe today, when you're starting with these funds, continue monitoring their progress and see how it goes. Because while you will remain invested in equity fund, it's equally important to ensure that you are with the fund that are performing consistently well. So it doesn't mean that you will kind of keep on making changes every now and then, but keep an eye, and if the need be prepared to make changes in the portfolio.
All right, Gaurav, is there anything else you want to understand more?
So I missed out the small cap part. So which fund I need to target for small cap?
Hemant sir?
Sorry, I couldn't hear it.
I think he's talking about the small cap.
Yeah.
Well, I did
Fund?
mention that he can look at Nippon India Small Cap Fund.
Small cap, that's the name for you. All the best, Gaurav. We move on to our next question, which is from Harshit. And Hemant, he wants to do a lump sum investment of 2 lakhs, and he wants to understand if this is the right time to invest, and what if there's a correction of 20-30% in mid and small caps, by the end of this year. How would the investment for him actually fare out? And he has a time horizon of only 5 to 7 years, and he also has something already placed as far as his other investments in mutual funds are concerned. So he has a large and mid cap, he has equity savings also. 1 lakh rupees that he's distributed across market caps is what he's writing, and 15,000 again across mid and small cap funds. We don't have the name of the funds, but then yeah, that's the overall strategy that he's discussed.
Well, I think, look, Kavita, it's very difficult to predict the market movement in the short term. Okay, I mean, we all know that volatility is a natural phenomenon in the stock market, so the correction can happen anytime. The important thing is that's why, when you're investing in the equity fund, to have a well-defined time horizon, invest for the longer term, follow a disciplined investment process wherein, you're investing through SIP, for example. Even if you can't invest through SIP, make sure that you're investing on a regular basis, be it a quarterly basis or half yearly or maybe once a year. So when you invest in a very disciplined manner, you end up investing at different market levels, which helps you in averaging your entry price and bring your cost down. So I think it's very, very important not to really worry too much about the volatility in the short term, but continue to keep your focus over the long term and follow a disciplined process. Because, like I mentioned, corrections can happen anytime. But if someone is looking to make one-off lump sum investment, one-off, okay, that's the key word here, then I think it makes sense and that to phase it out through STP, maybe over the next 3 to 6 months. But if it's a part of overall portfolio and the money that you're looking to invest at lump sum is not a very large proportion vis-a-vis your overall portfolio, I think then it doesn't make sense to kind of wait for the market correction to invest. So clearly depends on what kind of investor you are and whether it's a one-off investment, whether it's a regular part of an investment to help you decide as to whether you should invest through STP or as an lump sum.
To do, and for more clarity, you can send us your question again just in case you want a specific solution. But then on that note, it's time up on the show today. Hemant, thank you so much for being a part of this show and helping our viewers with their financial portfolio queries. And I'm going to leave our viewers with a WhatsApp number and email ID where they can send us your question, be it about mutual funds, about insurance, your tax planning, or anything related to your loan that you might want a strategy to pay it off. You can send us across on our WhatsApp number and email ID. Thank you so much for watching. Goodbye.